What's going on, people? It's GBP baby. Welcome to another backtesting video. And I'm probably going to spend another 30 minutes in the charts, this time on GBP USD. We are usually on Euro USD, but I thought, you know what, let's look at the OG today. So sit back, relax, you know how it goes, and there's going to be some music playing. Yeah, man. Let's get straight into it. So you can see how we trade higher into London session on Monday, and we find support in this. This is Sunday's trading, but you can see I like to call it an inverted order block because it was a bearish one, now it's turned bullish, and you see how we find support there. So let's call that inverted order block. We push higher as London starts. We trade back into this rejection block. I personally don't like price action like this when it comes down aggressively and back into the order block, especially the wick like that. I find it so nerving, and I don't think I've quite overcome that. But I guess with a bias, I guess it's all right, isn't it? But you can see our price is stacking itself as per usual, and it traces the 50% level off that wick. So I'm gonna call this a bullish rejection block. How would we know that this is a rejection block before we get there? We know this is a rejection block because when this wick here traded away from it. So when price comes back into here, we should expect the same reaction, especially if we're bullish in general. I'm gonna make these words smaller. There we go. That's a nice entry. Where's my... Am I going crazy? No, I'm not. Right. Cool. Buying that rejection block. Where would I let my stops off? Above this swing high. There's a breaking market structure here as well. So I'm gonna... structure. So if I was too afraid to enter here, there's also a nice entry here. I'll just mark that out in a sec. Into this fair value gap. Now, why shouldn't price come down into this fair value gap? Well, it shouldn't come down into this fair value gap because we've already traded this range from here to here. Is now completely traded. So as soon as we broke through this little swing high here, we should know that price shouldn't necessarily trade below this candle. So you can see it stacking itself. So I'm gonna mark out the high of this. And you can see how quickly price rejects away from that. Well, I guess it's the fair value. I guess it's the consequent encroachment of this actual fair value gap. So I'm going to do that instead. And you can see it's finding support, and again a inverted order block, as I like to call them. Inverted OB. It was a bearish one, so now it's a +1. I'm gonna make this a different color for the fair value gap. I'll make it a lighter blue. And you can see we found support and we traded away from that. Also, it's nice to see this breakaway gap, if that's what it is. Again, I'm still I'm still not 100% sure what a breakaway gap is actually defined as properly, like recognizing them, but so we trade here of higher, we expand higher, price falls down, and we trade back to this order block here. So that's an entry, and I guess that's also a is that a, well, I don't want to drop down to the one, I don't want to drop down to the 1 minute, but I'm guessing this is gonna be a what do you call it now, a breaker, because we've got a swing low, and a swing high in between. But I'd have to go down to the 1 minute to see it better, but I do believe this is a breaker, and that's what we traded back into, and that's why we see a reaction. But we do tap deeper into this order block. There is that a fair value gap? I guess there's this one, and we close it in completely here. But this is short-term Southside liquidity. This is engineered, and it's not uncommon for price after 5 AM, between 5 and 7, to take out certain stops before the move, before the London move. So I just realized my microphone was off. Cool. So trade higher into New York, sorry. Here we take out a little south side here, trading into this wick. There is a slight fair value gap between here and here. Does that get no refer to? I mean, I don't really see any entries here. This is quite choppy price action. Very choppy, very choppy price action. Back, forth, back, forth, back, forth, back, forth, back, forth, back, forth, and then we expand higher. So once we leave this range, I guess when it comes back, that would be a good buy. But I'm not sure how high this week goes on for. Trade down into this. So this is the Asian session, and then obviously we have a nice consolidation here, in creating a range. Asia takes out the low of that range, fails to take out the high of the range, and then we drop off precipitously into Tuesday. So I'm going to mark out this range. I did this in the last video, a similar thing as in mark out the consolidation range. Because what this is doing, it's creating buy-side liquidity. Here, resting here at all these relatively equal highs, and then we move lower, so we're breaking structure here. So I'm gonna make that BOS because this is the breakup structure. And I guess that's why we continue to trade lower. We fail to trade above this, so I'm gonna mark this out as buy-side liquidity. yeah, once you see this, I guess, again, so let's say we start in London, we wake up at 7 a.m. I would look back, I'd see this breaking, I'd like to think that I'd notice this breaking market structure, and now that means that any high made before we go into the sell side liquidity into our target would be an opportunity to enter, but I'd probably end up missing this move because it's pretty crazy, unless of course you're up before midnight, before 7 a.m. New York, which means, so I guess we tagged buy side here, recognizing that as well. Oop. Breaking market structure here. So any retracement higher should be an entry into trade into this bearish already order block. And we also trade into this fair value gap, 50% of it. I think that's a breakaway gap. So let me just make this all clear for us. I'm probably just going to let the music play for a little bit unless I've got anything to say, so I'm going to turn it up for us. So something I find interesting is, I'm going to show you now. So this order block here, when we start to move higher, the way that price trades through this, I find this very, very interesting. And look how aggressively we traded down after that. Like, it was like here, it was a bit like, and then, and we just leave it. We leave the range completely. And there's also an entry and a fair value gap there as well. So I guess at this point, once we close here, that's when we want to start to anticipate price returning into the fair value gap and leaving off precipitously, because we're disrespecting this bearish turn bullish order block. So this is again an inverted order block, as I like to call them, with and then there's a fair value gap layered on top of that as well. So when I'm going to start seeing if I can recognize things like this that can potentially hint towards higher prices. and then we fail to take out this high here, and also it's the 50% level. Like, you can't you can't make this up. Right, let's mark out the 50% of this fair value gap. So it's respecting that at a point, at an important point where there's a break in market structure. Although this low, I would have liked to see this take out this low. It might have actually, I'll check in a second. But what was I doing? 50% level of this, 182. Why didn't price trade up to this fair value gap, Sean? It didn't trade up to that fair value gap because it doesn't need to, because we traded on the upside and the downside and upside again and the downside again. So it doesn't need to trade back up to that, especially if we're bearish. Just because I see this as a breakaway gap, if anything. Price respects it. We traded to it slightly here and then we turn away straight away, closing in. What's it called? Immediate rebalancing here. Right, so let's mark that all out because that's important stuff. Yeah, here, the back and forth, that's crazy, right? I want to make this note recognizable and then make a note. Trying not to make it too wordy, but this is interesting. I'm gonna make an arrow actually. Let's make that an arrow. This high. So although I'd love to think that I could enter on a candle like that, because this is craziness. Can I change the font? No, I can't. Breaker, where's this? I'm gonna make this smaller as well. Right, cool. So price failed to trade deep into the fair value gap because it has already been traded for both, traded both on both up and downside. As you can see, so we went up, down, up, left it, wicked into it again, and then we traded away from it, traded through it, disrespecting it. So it's failed to provide support. So it's providing support right up until this point, and then we break through it, and then we leave it. So my entry, which is a craziness, I haven't been adding entries actually, have I? How long have we been going? 19 minutes. yeah, I didn't see any entries for the rest of the day anyway, really. So let's just copy that. This is a buy because we are taking out sell side liquidity, and then we can anticipate price to come take out that buy side. But so I'm going to put that here, and then I'm going to put a red one here for a sell because it's above the buy side liquidity. Probably take off half there as well. So where is another sell? Here was a sell because we have a break in structure, so that return to the order block here would be a sell. And I'd like to, this would be able to sell at this point there, here would be crazy. We could let go here of our positions, or if we knew where price was traded down into, which is this rejection block here again. That's oh, that is crazy. So where do we have a break of structure here? We have it forms at about 2:40 a.m. We have a swing high broken, so we have a break of structure. So our entry could be here. This is a breakaway gap. When I see price do this, so we create there's a down candle, and then we create the fair value gap. I don't want to see price come back down here now because this down candle should be acting as defense. It should be an inverted order block, as I like to call them. So I'm going to call that inverted OB. And then we can see our fair value gap for a beautiful entry. And then I'll put a buy sign down there. And this is a low resistance liquidity run. We've got another entry that could be done here. And this should be now providing the support. You can see there's an entry here. That's interesting actually. This order block now has become bullish again, I guess, in a way. And this fair value gap should now be providing support because we traded back through it properly. So this is an entry, and my stop loss in this circumstance would be 50% of this. Enter in here, and then let go above this buy side liquidity. But price even respects the 50% level of this. So you can see how prices keep stacking. 25203. So I'd want to be buying here. You see this move here when it comes back down to that would scare me. And then where would I have my release? Above this buy side liquidity. So on this candle right there I'd be selling. And then obviously we create a high, we move lower, take out this short-term high, fail to take out this high, then fall off during New York. So where do we have to break in structure here? This swing low. So after that, price shouldn't trade back above that. We see until it's traded to its lower time frame target, lower sell side target. So that's what break of structure. Is there an entry offered? I mean, there's this fair value gap. There's this fair value gap. I don't really see an entry here, to be honest. I guess this return to this. bearish order block. Let's mark this out and see how price treats it. Right, that makes sense, doesn't it? So we have a consolidation. Price fails to take out the high of the consolidation, but it takes out this short-term low. This is similar to what happened here. It fails to take out the longer-term low high, but we took out the short-term low. So we're seeing the exact same thing kind of happen here. That's interesting. So this is short-term buy side. And then we've got the swing high of the consolidation range, high of consolidation range, I'm going to call it. So the low of the consolidation range would be here, and you can see we took out the short term, but we failed to reach the high. And we also traded to the 50% level of the volume of the order block. There's a lot going on here actually. So the fact we took out buy side here, we should be expecting a rush down to the sell side anyway. Yeah, so I'm going to mark out all this real quick. There's a lot. This is also a rejection block here. Why? We traded into it here, got rejected, traded into it here, got rejected. So what should we expect when we trade into it again? Rejection. I guess this is a mitigation block. Swing high, and the swing low in between that would be this low. So I'm going to mark that as a mitigation block. And then we have this short-term swing low that was engineered for a target on the sell side. So that's why we want to be buying back. You can see we trade to the that's interesting, this fair value gap inverted, buy side, downside, should now act as resistance. We see that here. I guess it's been fairly traded. And then consolidation for the pretty much rest of the range until, of course, Asia starts, Asian session. So we have a consolidation range. Being able to recognize these consolidation ranges is very important. Because once there's breaks and stuff, you can see where the buy side, sell side has been taken, and based on that you can start to plan your moves accordingly. And again, a similar thing that we've noticed as a theme on the past 3 highs. Here we fail to take out the longer term swing high, but we take out the short term swing high here. So we take out buy side liquidity, but we fail to take out the higher term buy side liquidity. Again, point to lower prices. Also we have a small break of structure here. So this is the high of the consolidation range, and we failed to take out that, but we take out the other one. Just things to note. So I'm gonna bring this video to an end because we've been going for 30 minutes. I think we've got through how much data? We got through about 2 days of data, but I hope you enjoyed, guys. Thanks for watching, and I'll catch you in the next one. Peace.